Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Tuesday morning pre-market webcast. Okay, hope everybody had a good long weekend. Uh, the weekly pivot is down on my stuff at 1890.20, and if we back this out and turn it into a 15-minute chart, you can see Sunday night overnight you had a fail at the weekly pivot, lower high. They tried to push it down yesterday. They could not take out 66 in the shortened Globex session. They based a little while. The last couple 3 hours of yesterday were really pretty awful. I think we did a 7 to 8 handle range during, what would normally be the regular session, which is why I don't like trading those kinds of markets. What we saw, however, after the open on Tuesday night was we saw a sharp move up to the weekly pivot, a pullback, another move through, an attempt to hold it again, but they were trying to hold it from the position of a higher high. That held, and then they ramped it as high as, what's our overnight high? 1907 half. So, a lot of people were looking at all the data coming out of China last night as it was going to be a game changer and really reverse the market and end the bear market rally. Now, the 1907 half, that may be the end of the line. On the other hand, we may be getting ready to do something on on a multi-day basis. We did something on a multi-day basis here, and ultimately it was sold. It was sold to new lows. We could do something on a multi-day basis here. We've already tried to take out the 9-day simple moving average here, the blue line, around 1905 to 1906. That's already been tested, and that's failed. So, the bears would love nothing better than to hold the 9-day simple moving average, hold the weekly pivot on a closing basis, meaning they get back below 1890.20 and they stay there. Okay, I think that would leave enough on the candle for people to say, look, okay, the bulls had their fun, and then we get back to rally selling to new lows in earnest. Otherwise, what you're going to see is you're going to see a reach up into the 1920 area, and potentially you could try to test some of these reaction highs. Ultimately, this reaction high up at 1946 half, which was the end of the last rally attempt. All the bears need to do in order to stay in complete control of this market is to put in a lower high anywhere underneath 1946 half. That's all they really have to do. So, the bears have worked very hard, and the fruits of their labor are they've got an advantage. Even if we do go on a multi-day rally, they've got plenty of room. What the bears can't fall into is the trap that they've fallen into so many times before. They give up one level. They give up this week's weekly pivot at 1890. Then they give up the 9-day simple moving average. Then they give up this high. Then they give up this high. Then they give up this high. And before long, you've got, we're up at the mid-band. You've got, bears bailing out all over the place. And that's how V's happen. Okay? So the bears can, they can allow a relief rally. But in these key areas, they need to stand up. Okay, everybody have a fantastic day. Follow us on Twitter at Princeton Trader. Check out the website. Come check out the chat room. I'll be back tomorrow morning with another webcast. Trade 'em well, everybody.